This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you in part by
TheStreet.com, featuring Stephanie Link, who shares her investment strategies, stock picks, and market insights with Action Alerts Plus, the multi-million-dollar portfolio she manages with Jim Cramer. You can learn more at TheStreet.com/NBR.
Sharp U-turn stocks rallied into record territory as the Federal Reserve Chair offered an upbeat outlook on the economy, but that soon faded, leaving investors to wonder what happened.
Old media, new strategies. Traditional companies are plowing money into cutting-edge ventures to compete with the new guys, and their earnings reports reveal a lot about the future.
The friendly skies frequent flyers may finally have something to cheer about, finding better deals on the flights they want. All that and more tonight on Nightly Business Report for Thursday, May 8th.
Good evening, everyone. Wall Street today went from sizzle to fizzle. You may not know it from today's closing numbers, but the Dow was up triple digits, even hitting an all-time intraday high this morning before drifting lower. And there are good reasons why investors bought up stocks. Another round of solid earnings. First-time jobless claims were down by 26,000, and more reassuring words from Federal Reserve Chair Janet Yellen on Capitol Hill. In her second day of testimony to lawmakers, Yellen promised to keep record-low interest rates, quote, right where they are to boost the economy until both housing and the job market do better.
Our objective in monetary policy is to continue to maintain an accommodative monetary policy for as long as necessary to see recovery of the labor market. To a state, it's hard to know exactly how to characterize it quantitatively, but what the Federal Reserve Act calls maximum employment, or we used to call full employment for short, and in many ways we're far from that.
Let's take a look now at how the major averages ended the day on Wall Street. The Dow rose 32 points, but not enough for a new record high. The Nasdaq fell 16, and the S&P was lower by 2 points. Now, over in the bond market, also a volatile day, with the yield on the 10-year Treasury note up a fraction, but still near a 6-month low. So what happened today? Bob Pisani explains.
Stocks started the day strong and ended flat, with small caps again the losers. The day started out well with several positive developments. Central bankers like the Fed's Janet Yellen and the ECB's Mario Draghi both implied they would continue to keep rates low. And several retailers reported very strong sales for April, including teen retailer Zumiez and L Brands. That's the owner of Victoria's Secret. Finally, there was a good open for a tech IPO. Chinese security app company Cheetah Mobile, which priced at the high end of its expected range, it ended up about 1%. It was the first tech IPO in a while. But the problem was again with the volatile new tech and internet stocks. So companies like Workday, FireEye, Facebook, and Amazon were all positive most of the day, and then they faded away late in the afternoon. The Russell 2000 index, a basket of small cap stocks, went from roughly up 1% right after the open to close down 1%. It's near the lows of the year, so with no bottom in sight, traders are expecting the volatility in tech to continue. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Chris Gaffney says there are a lot of positives in the market, and he expects the major averages to be up 8% or more by the end of the year. He's senior market strategist at Everbank Wealth Management. Mr. Gaffney, welcome. Good to have you with us.
Thanks, Tyler. It's nice to be here.
You know, most of our interviews begin with a question, okay, what's your overall outlook and what do you like in the markets? I'm going to turn it another way. What's your overall outlook and what do you not like as an investment? What do you say avoid over the next 12 to 18 months and why?
Right. We think that the market is on a positive tone and will continue to strengthen as we go through the year. We certainly had a rocky start to the markets. But in the second half, we do expect it to continue to recover, and the recovery actually to pick up some steam. I guess it could be called a little Monday morning quarterbacking, but we don't like the tech stocks still. We don't like those momentum stocks. I know a lot of rotation has already occurred out of those stocks, but we still don't trust that sector.
So how do you feel when you hear all this news about Alibaba, for example, going public and a whole bunch of other tech companies? You're feeling to tell your clients stay away from these?
We do, and we typically don't suggest clients go into the IPOs. They're very difficult, and typically they get overpriced on the initial offerings. So we do tell people to stay away from the tech stocks. We think the cyclicals are actually going to start to perform very well as the economy recovers.
When you say cyclical, so that assumes that you have a fairly sort of optimistic growth outlook for the U.S. economy, number one. When you say cyclicals, give me some categories, or if you prefer, some names of companies in those categories that you would buy here.
Yeah, consumer durables are a category. I can't really share names. We don't get stock specific necessarily. But consumer durables, we think the consumer sector will come back, and that's one category that we think will do well.
Mm-hmm. I understand, Chris, you also like some of the stocks in the emerging markets. Which ones? And how much in your portfolio do you advise clients to have of U.S. and non-U.S. stocks?
Well, we do promote at Everbank Wealth Management a very diversified investment portfolio. The sectors, the emerging markets in particular, Brazil stands out to us. We made a switch into Brazil earlier in the first quarter and believe that it will continue to outperform going forward. It's got great yield differentials. It's got some positive occurrences in an election coming up, and also the World Cup and also the Olympics eventually.
What do you say to investors who really depend on their portfolios for income and specifically have a lot of bonds in their portfolios?
Well, fixed income, we think you should remain allocated into fixed income. We do think that interest rates will start to rise. However, so we shorten the duration in the fixed income sector. But you've got to have the fixed income asset allocation in your portfolio. I know the utilities were down today. We think the utilities are a place to get some, and also some floating rate notes are some investments that actually will perform well as interest rates rise.
All right, Chris Gaffney, thank you very much. Chris is with Everbank Wealth Management in St. Louis.
Janet Yellen told lawmakers on Capitol Hill today that one of her biggest concerns is the slowdown in the housing market. What's causing the concern? High prices. And what's driving up those prices? Diana Olick has the answers.
Home prices are rising so far, so fast that at least 1,000 local U.S. cities have hit new record highs, according to Zillow. That has sellers positively giddy with potential value.
Home prices are hot because conversations in the neighborhoods are that the trends are definitely upward.
40% of sellers surveyed by Redfin said they are planning on pricing their homes above market value when they list in the next few months. That's up from 33% at the beginning of the year. The Soricellis were some of those confident sellers in Northern Virginia.
My wife and myself we take a lot of pride in our house, and we did a lot of upgrades. So, we put a lot of money into it, and it had a lot of ownership. And so, trying to reconcile that with whatever the market is right now was a little bit of back and forth.
Their agent, Jeremy, talked them down to a lower asking price, but it was not easy.
When you look at comps, it's very difficult. The trends are hard to identify. You can have on any given street price variations of $50,000 to $75,000 for the exact same house.
Those variations are partly due to such a high volume of cash in the housing market today. All cash sales reached a record 43% nationwide in the first part of this year. In much of Florida and in several other cities across the nation, more than half of all sales were all cash.
It's making it harder for an ordinary single family who's getting a mortgage to compete as a buyer, especially given how constrained inventory is. And that's making for frustrated buyers in a lot of these sellers markets.
Credit is not easing at all. So in markets where there are fewer investors, sellers need to price accordingly. The Soricellis took their agent's advice, and their home sold in one day.
Not having to go through the waiting and some of the aggravation of having your house on the market for an extended period of time is that's worth a certain amount of money.
Especially when they see their neighbor's house still sitting after a price drop. For Nightly Business Report, I'm Diana Olick in Washington.
Nice house. And just when the housing market needed some good news, mortgage rates actually hit a new low for this year. Freddie Mac says the average interest rate now for a 30-year fixed conventional loan fell to 4.21%, and that is the lowest since early November.
Also out today, solid quarterly earnings from Freddie Mac and Fannie Mae, and even better news for the U.S. Treasury. Those strong earnings will allow the two government-run mortgage giants to pay back Uncle Sam more than $10 billion in combined dividends.
Some new legislation in the works that would stop so-called corporate tax inversions. That's when a U.S. company that is, reincorporates overseas to avoid paying the higher U.S. corporate tax rates. Democratic Senator Carl Levin of Michigan is working with other senators on a measure that will close a gaping hole in the U.S. tax code that he says would devastate federal tax receipts. The practice came to light recently when Pfizer bid to acquire Britain's AstraZeneca and said it intended to re-domicile in the UK to take advantage of that country's lower corporate tax rate.
Still ahead on NBR, how traditional media companies are transforming themselves to stay dominant in the industry and fend off competition from newer rivals. That's coming up.
Earnings out after the bell from CBS. The I network beat forecasts on earnings per share, helped by increased licensing of its shows and higher payments from cable and satellite operators that carry its channels. But revenue was a different story, and it looks like advertising sales from its entertainment division was a little light last quarter.
Also reporting late today, News Corp. Net income fell last quarter, but the publisher of the Wall Street Journal and the New York Post still beat Wall Street estimates as stronger book publishing revenues offset weakness in its newspaper empire.
And CBS and News Corp, two old media companies that have had to adapt to new technologies and viewer trends to keep customers and shareholders happy. As more media companies report earnings this week, Morgan Brennan takes a look now at the changes they're making to stay relevant and profitable.
The media landscape is changing, and fast. As traditional media giants report earnings this week, their results and the comments executives are making call into focus key trends that are redefining the industry's players and the way content reaches consumers. Starting with over-the-top services, or OTT, web-based streaming services that bypass cable TV. New media companies like Netflix, Amazon, and controversial Aereo have fueled this trend, but now others are getting involved.
And you're starting to see services like the one that Dish Network has proposed with Disney that will be at a meaningfully cheaper price point and is really targeted at the cord cutter for the first time. You haven't seen something like that before, so it's something everyone is watching carefully.
In addition, AT&T is partnering with the Churning Group to invest in an OTT service, and Verizon recently acquired Intel's Internet TV product, OnQ.
If you start to see these kinds of models gain some traction, it almost forces the content providers to embrace them and start to provide their content. So it's a bit like an arms race, right? Where once it gains momentum, the arms dealers have to start to play. And the arms dealers in this case are the content providers.
But content is only one piece. Distribution is the other. And to compete in video, broadband, and wireless, many companies are looking to consolidate, with Comcast's pending merger with Time Warner Cable only adding to the sense of urgency. And that deal still has to clear the Federal Communications Commission. For Nightly Business Report, I'm Morgan Brennan in Los Angeles.
Well, speaking about that Time Warner Comcast deal, in Washington today, there was a hearing about it. Lawmakers from both parties expressed concerns about potential negatives in the proposed $45 billion deal, including whether the combined company would control too much of the country's cable and broadband markets, or if smaller programmers would ever be able to sell content to the merged cable providers. Representatives of Comcast argued that the merger could help consumers by slowing the steady rise in cable TV bills. Comcast is the parent company of CNBC, which, of course, produces this broadcast.
Also in Washington, more than 100 tech companies, big and small ones, urged the FCC to scrap its so-called net neutrality plan. Google, Facebook, Twitter were among the firms writing to federal telecom regulators opposing a plan that would regulate how internet providers manage and charge for traffic on the web. The FCC's proposed plan would let content companies like Netflix or Amazon Prime pay internet service providers a little extra to create new high-speed broadband lines to send movies or other content more quickly down the line. But opponents say it means customers who use them would have to pay more for internet service and that it could potentially shut out new or less influential or less affluent web-based companies.
McDonald's says sales rose in April, and that's where we begin tonight's market focus. A sales increase in Asia helped offset disappointing sales in Europe and flat business in the United States. The world's biggest burger chain says industry dynamics are still challenging, like competition from rivals. Shares were off just a fraction, though, to $101.95. Now, another fast food company traded lower in today's session. Wendy's first quarter earnings surged as the company posted gains from the sale of the company-owned locations. That helped cut operating expenses, but also pull down revenues. Still, the results beat analyst estimates. Despite that, shares fell slightly to $8.30. High milk prices soured results at Dean Foods. The dairy company warned it'll report a second quarter loss and cut its long-term profit outlook as it struggles with high commodity costs. Dean also blamed severe winter weather for the forecast, saying it disrupted milk deliveries to schools. Shares fell more than 5% to $14.55. And Priceline booked more hotels, car rentals, and airline tickets, which helped the travel site report an increase in profits. But the company's outlook for the current quarter came in light as it's expecting bookings to slow down. Still, the CEO says he's hopeful for the summer travel season.
We remain really optimistic about our growth prospects. Obviously, as we become a larger company, the law of large numbers is out there, but we like to guide in a conservative manner. I think it's a reasonable manner. We have the World Cup coming up, which always affects bookings, but we're actually very optimistic about next quarter and the summer.
Well, meanwhile, shares were down more than 2% to $1,108.
Barnes & Noble banking on textbooks to up its profits. That's according to a report from Reuters. The bookseller plans to expand its presence on college campuses. Now the chain has about 700 college campus stores. But within the next 5 years, the report says it plans to have 1,000 campus locations. And that sent shares up more than 2% to $16.04. Barclays is cutting 19,000 jobs over the next 3 years. Britain's second largest bank by assets will also set up a, quote, bad bank to house much of its investment banking business and its European retail operations as it looks to turn itself around and fix its trading slump. The company's CEO explained the shakeup.
Basically, we're dividing the bank into two, a core group of 4 strong businesses that are well positioned in their markets with good growth prospects and good returns. We're combining our personal and corporate banking interests in the UK into a new business.
Investors cheered that move, and shares popped more than 7% to $17.73. Toyota posted a record annual profit and global sales of more than 10 million vehicles for the first time ever. But the automaker is expecting a slower year ahead and a drop in profits as momentum from a weak yen fades away. And shares of Toyota were down slightly, 108.15. After the close, Gap announced its same-store sales rose 9% in April, driven by gains at its namesake unit, its Banana Republic business, and its Old Navy store. The retailer also guided first quarter earnings and revenue above the street estimates. Shares spiked after hours during the regular session. The stock was up 1% to $39.24, and there you see the spike afterwards.
And General Electric is taking 3D printing to a whole new level. GE Aviation is working on its first jet engine composed of parts made from 3D printers. Melissa Lee got exclusive access to GE's facilities in Cincinnati.
So how do you turn this into a jet engine part? Walk me through.
Well, we start with a very fine metal powder, and we load this material into what we call an additive metal machine.
And this is deceptive because this is very, very fine powder, but it's extremely heavy.
What this material is capable of doing is resisting high temperatures. It's very high strength, so yeah, this is actual metal material just in powder form versus in a plate or bar form that most people are used to seeing.
More than 6,000 of GE's next-generation jet engines have been ordered by customers like Boeing, Airbus, and Lockheed Martin. By 2016, the new engines will contain a 3D printed fuel nozzle that is lighter, more efficient, and could save companies big bucks.
The beauty of what we're doing is we take what would have been 20 different components that would have been machined, brazed, welded together, and now we're growing just one.
And it's lighter?
It is lighter. It's about 25% lighter than our previous generation fuel nozzle, and that's absolutely key in the aerospace industry. For every pound that you take out of an engine or out of the airframe, you're talking about hundreds of thousands of dollars in fuel savings over the life of that product.
GE may be on the brink of a new industrial revolution as it makes manufacturing faster and more cost-efficient right here in the U.S.
And this is where the magic happens. This is where the laser beam comes down and hits the surface of the metal powder and consolidates it into a solid component very precisely.
How long does it take for the part to come out?
If you have a very bulky, large, tall part, it could take up to, say, 5 or 6 days to build.
6 days?
It
Wow.
could. But if you have a bunch of very small parts, then it could be an overnight build.
I think there are a lot of people out there who are going to think, I'm on a plane and there's a jet engine part where the layers are melted together and they're not really confident that it's going to stay together.
Once we weld the material and it's melted, it's no different than, say, a casting or any other manufacturing process where metal goes from molten into a solid.
Within the next decade, the plane you'll be flying on will likely have a jet engine containing wholly 3D printed parts. GE says the increase in 3D printed parts won't replace jobs, but will actually create more jobs right here in the U.S. For Nightly Business Report, I'm Melissa Lee in Cincinnati.
Fascinating stuff. All right, coming up, something frequent flyers don't hear very often, and it could lead to better deals when you book a flight. That story, right after this.
Activist investor David Winters is turning up the heat in his criticism of Coca-Cola for what he calls an outsized pay plan for the company's executives that he says takes money away from shareholders. The CEO of investment firm Wintergreen Advisors, which owns more than 2.5 million shares of the beverage giant, sent a new letter to Coke's board members urging that the plan, which was approved by shareholders, be scrapped in the interest of good corporate governance. Now, he also sent the same letter to Warren Buffett, whose Berkshire Hathaway is Coke's largest shareholder. Now, Buffett criticized the pay plan, but he didn't vote for or against it because Winters says he didn't want to embarrass Coke's top brass. Well, Coca-Cola declined comment, and Warren Buffett is traveling and couldn't be reached.
So did you ever order something small and it arrives in a great big box, and the extra space is filled with air cushions or a ton of those infuriating packing peanuts? Well, that may all be about to change. Starting next year, FedEx will not only start charging some shipments by weight, as they do now, but also by the size of the boxes. Now, that may encourage online retailers to be a lot more careful about how tightly they pack goods for shipping and delivery to you.
Well, here's some other good news for you. For those looking to cash in their frequent flyer miles for an upcoming trip, a new study says there are more flights holding seats for those redeeming reward miles or points. Phil LeBeau explains why airlines are becoming more frequent flyer friendly.
Cashing in frequent flyer miles for a free ticket or a seat upgrade hasn't always been easy. Blackout dates and other restrictions make redeeming miles challenging.
I think it's become more difficult. I think the number of mileage per flight has increased.
There seems to be less available flights and less direct flights.
The seats fill up because they only have X amount, they only open up so many, and so it's a lot of times you can't get the times you want to go, you really want to go.
Now, cashing in miles or points is easier. Switchfly's annual survey of frequent flyer reward availability found open seats on 72% of the flights checked. That's a slight increase from last year. Why the improvement? Well, one reason is the popularity of bank-issued credit cards that offer frequent flyer miles. It's forced airlines to work harder to free up seats for their own frequent flyers.
In the U.S. in particular, the frequent flyer programs are becoming more concerned about competition from bank-issued travel cards. And so they want to compete against the travel cards that are issued by banks. And so this is one way for them to do that, is to make their programs more attractive.
Larger airlines like Delta are doing a better job with frequent flyer awards. Now, almost 2/3 of the large airline flights checked have open seats. That still trails low-cost carriers, where almost all flights are open for award travel.
Their programs are younger, so they have less accumulated point or mileage balance, so there's less of a reward shortage problem, as in too much demand.
Southwest and Air Berlin had frequent flyer seats open on every flight checked in the survey, followed by Virgin Australia and JetBlue as leaders in reward availability. Despite many airlines now requiring more miles be redeemed for a particular flight, finding the one that fits your schedule can still be tough. So staying flexible is the key to getting where you want to fly.
I've been lucky because I shop way ahead. I typically check around and try to be flexible with my travel dates.
Phil LeBeau, Nightly Business Report, Chicago.
And to read more about the change in using your frequent flyer miles, go to our website, nbr.com.
And finally tonight, earlier this week, we told you about the kickoff to the big spring art auction season, but so far, it has been a mixed bag. At Sotheby's last night in New York City, nearly a third of the 71 Impressionist and modern art paintings, drawings, and sculptures that were up for sale failed to get minimum bids. But one notable bright spot, a bidding war for a Picasso piece called Le Sauvetage, pushed the selling price to more than $31 million, which was more than double the pre-sale estimate. Le Sauvetage.
That'll go so well with that balloon dog.
Oh, my balloon dog. Yes, I like the balloon dog.
Your living room's going to look great.
Yeah.
That's Nightly Business Report for tonight. I'm Susie Garrow. Thanks for watching.
And I'm Tyler Mathisen. Thanks from me as well. Have a great evening, everybody. We'll see you back here tomorrow. We're going to do balloon dogs.
I'm Susie Garrett with a Nightly Business Report news brief. Wall Street today went from sizzle to fizzle, with the Dow even hitting an all-time intraday high before drifting lower on a sell-off in energy and utility stocks. The markets made early gains on more solid earnings, a drop in jobless claims last week, and more reassurances from the Fed's Janet Yellen that interest rates will stay at record lows for some time. After a volatile day on Wall Street, the Dow rose 32 points, the Nasdaq was down 16, and the S&P lost 2 points. Mortgage rates hit a new low for this year, falling to 4.21%, the lowest since early November. And strong earnings from Fannie Mae and Freddie Mac will allow the two government-run mortgage giants to pay back Uncle Sam more than $10 billion. Be sure to tune in to Nightly Business Report right here on your public television station.